following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, and folks, we are kicking into the last weekend of 2014. So hope everyone has an awesome 2015. Yesterday's gone. Tomorrow's not here. What are you doing right now, folks? Let's take a look at this quote is by Vincent Barnett. Almost everything is more complicated than it seems, but almost nothing is hopeless. Life's pretty easy, actually. You just got to look it in the face. Market-wise, let's take a look at it out here. We have the Dow Industrials up 57, NASDAQ up 41, S&P's up 9.5, gold contract up $19.80, trading at $1,193 an ounce. Silver up 38 cents at $16.09 an ounce. Platinum up 26 bucks at $1,215 an ounce. Copper down 4 pennies at $2.83 a pound. Light sweet crude down a buck at $54.85. That oil market, we're going to bisect it and dissect it. It looks to me like that thing is going to get down to $50, and I'm talking about in the next 3 or 4 days. And it's hammering that low out there, folks, and it wants lower price. Bonds, we have the 10-year flat at 126, 30-year down up 6 ticks rather at 143.11. Bond market came down hard on Tuesday and Wednesday. Light volume. I suspect you're going to start building some more cause to get to higher price. King dollar up 87 ticks at 90.31, and the divergence inside King dollar is this. King dollar is reaching up for its 2005 highs. That's 92.52 on a continuous contract. That being said, however, is that is not stopping the metals market. So my take is that King dollar is going to be pulling back. That's going to be the end of the move for a certain amount of time. What is that time frame? Is it 3, 4, 5 months? We'll see. The King dollar has been on a tear for 7 months. At 92.50, folks, that would be a 100% move of a move. Huge move. I suspect we're going to basically pull back slightly, go sideways, do something other than continue higher with King dollar. Because what you did have in the metals market, they had every reason to whack the metals market down. They couldn't handle it. Euro is down 48 ticks at 121.77, and the yen is up 28, trading at 120.38. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. They get some price spread going out here today, folks. You're up 10 bucks. You're at 2092. Of course, we get holiday trade, and there's going to be no volume whatsoever. On the NYSE, you're going to do all of about 400 million, which for a full day, that's insane. We'll probably do about the same amount of volume we did today, folks, which we did on Wednesday, which was the market was only open from 9:30 to 1 o'clock. That was 349 million. Maybe we come in at 400 million. The Dow Industrials, we take a look at the Dow. Same setup in the Dow. Dow right now is up 55 bucks. You're at 18,085. I'm going to go back to the S&P for a second, because one of the targets in the den were, saying, hey, let's get it over with, hit the 2100. And I suspect what you do have out here is that you're at 2092.8, 0.28. That thing it'll probably whack that 2100. That being said and done, however, what you are going to see, I suspect, next Monday and Tuesday, you're going to see some volatility in this marketplace, and that's on the way down. If we go over to the NASDAQ Composite, we look at the Composite next. Composite is up good today, up 39 bucks. The high in the composites, 48.10, we're over the high. That thing will spike. You know, note that, and maybe it's the spike on Monday morning before it gives it up. And where I'm going with that, folks, is the IBB. This iShare NASDAQ Biotech Index. Right now, it's up $6.53. You're trading at 306. That's after coming down hard to 292 with monster volume. What we've done is this. So the IBB, the Biotech Index, made a high out here. This is the IBB on the 19th. It got to $319. You made that high with 2 million shares. You come off that high with 3.6 million. So we went from a price point of 319 down to 292 in 2 days. You back up on dramatically lighter volume. So you have a counter trend bounce that's happening, and I do expect that we can get up Monday morning somewhere about 310. This biotech index, though, is clearly set up that it wants to get down into this 247 area. So that is one monster number on the way down. Now, let's go over to the small caps. The Russell 2000 has been trying to hit this high, and the high that we're talking about is the July 1st high. The July 1st high in the Russell 2000 is 1213.55. We hit it. We hit it today. Now, if we go take a look at the IWM, and I expect we're going to stay over that level right now. If we can look at the IWM, the iShares, the high in the iShares is 120.97. We've hit 120.81 thus far. Monday, it'll spike this baby. The characteristic of the volume there is right now we're doing 14 million shares versus 65 million. Bottom line, you know, we'll see whether it fails on price. I expect we will. Gold contract. We take a look at gold. So here's where divergence is out here in a big way. The king dollar, folks, is going to highs. Gold rejects lower price. Does it last week. Has lighter volume. Does everything that it should be doing. And this morning out here, so we have gold up 20 bucks. And she's inside a larger range. You know, once she came back inside this 1186 again, we're at 1193. She's going to go for the swing point up here of 1239. Expect what you're going to get out of this run up kind of pronto is 1256. Now, the 1256, that's when we had broken topside on October. The low of October was 1184. We went up to the 1256. Where gold actually wants to go up to, though, is the July swing high right now of 1347. And what we do have, you have some of the gold equities actually leading the contract on the way up. Silver. We're going to take a look at silver now. Silver is twice as volatile as gold. Silver today is up 37 cents. You're doing 15,000 contracts. Both gold and silver are going to need more contracts, more volume coming into the market next week. Bonds. The bond market, they smoked on Tuesday and Wednesday, came down hard, but guess what? When that was coming down hard, you had the fast price destruction without volume. When you have fast price destruction without volume on the way down, guess what? You want to go higher. On Tuesday, we came down with 500,000 contracts. That was going into 1.1 million. Wednesday, you came down with 341,000 contracts, and that was going into 1.6 million. Today, you're just going sideways. You haven't done anything. That cause building, however, is I expect to get up to the highs of October 15th, which is 129.28. That generates into higher bond prices, lower yields. Right now, the 10-year is yielding at 2.2. That still puts the 30-year mortgage rate just about 4%. Every time that the 10-year gets up to about 127, 128, folks, that's when your 30-year mortgage rate is about 3.8 to 3.9. If you're thinking of refinances, HELOCs, all the above, bottom line, this is not a bad time to do it. Oil. Now, you talk about tax break in oil. We got it in spades, folks, and it's all over the place. This oil contract right now, let me make sure I get the right contract, because oil trades every month, folks. So oil today, we're down 1.9%, and we're still on the G contract. Okay, so what we have is this. Oil's trading 54.77. We've done 110,000 contracts out here today. You're hammering the bottom, and the 54.28. So what this is going to do, folks, on Monday morning, this is going to open right at the lows. I expect what you're going to see here Monday. I think Monday is going to be a tough day because two different things end up happening here. We're in holiday trading, but because of the way that New Year's is set up, it's the whole time of the year right now. There's enough time off. I suspect Monday and Tuesday there's going to be some real action. If this looks like an ABC structure on the way down, that's going to be $50 oil. You stay right there. We'll come back. We'll talk about the oil and gas service stocks. This is Tom O'Brien. This is TFNN. Dow's up 59. Nasdaq's up 39. S&P's up 9.5. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about The Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive The Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on The Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now are up 57. You get a Nasdaq up 39. S&Ps are up 8.5. And we go into the good old bond market, folks. We'll go do the 30-year. We'll take a look at this 30-year. So the 30-year also came down hard on Tuesday and Wednesday. We right now are at 143.11. And the difference in the 30-year is this. The bottom of October 15th was 141.01. We're way into that bar. The top of that bar is 146.16. If you remember October 15th, that's when the bond market went topside in an extraordinary way. Gave it up. You know, it got up to a price point when the Fed came out with their statement. It went from 141.01 to 146.16, which is almost unheard of, by the way, folks. It's 5 points in the. That's 5.5 points in the bond market. That's almost $5,500 per contract. Bottom line, it backs down, has light volume in the back down, goes all the way back topside, and tests that on December 16th. Now what we've done about a 38% retracement of this whole move. She's building cause to get up and over this level. So it's going to be wild watching this whole bond market shake out. That's on a technical basis. The fundamental basis is clean, meaning the fundamental basis is that our rates are much higher than the rates across the world, and competitively, that's just telling me that you're going to have a hard time with our rates getting any higher. King dollar. Now, King dollar, I expect you're going to get a lot of action in 2015 as we have done in 2014. King dollar right now is at 90.37 for the day. Right now we're at 90.33 on that continuous contract. If we bring this back, what you see and what you're looking at is that King dollar wants to get up and test the highs of November of 2005. It's pretty wild when you think how fast time goes. It's 10 years later, okay? It had already tested the highs and got over the highs of 2008, 2009, 2010. So that spike is there to be had, and we'll see how it ends up testing it. That being said, because of the way that a few of the metals are trading, that's telling me that King dollar now will take a break, back down, and we'll see what is that correlation. What has changed that the aspect of King dollar wants to back down a little. Now, a normal retracement. This is a normal retracement in a bull, meaning King dollar has gone up dramatically, and if you and I'd be in this camp also that this is still a bullish move for King dollar. So when you take a look at King dollar, a normal 0.382 retracement can bring it down to 86. A 50% retracement can bring it down to 85. Now, either one of those moves, folks, okay, is a normal retracement move in a market that does want to go higher. If that's the case, so that's the bullish scenario. The bearish scenario would basically be that you'd have to come off the highs with heavy volume. Thus far, every little retracement on the dollar is very light. And I expect, we'll see, I expect that will stay the same. The real kicker here is going to be the correlation between King dollar as we go forward and gold and silver. The reason being is that you have gold, silver, oil, all of the above, they're always priced in dollars. And, after this retracement, what's going to be sticking out here on a longer-term basis, since we're talking 5 or 10 years, meaning just from what King dollar is testing right now, if we talk even a few years, if King dollar makes it over this 92 area, let's say we back down a little 3, 4, 5 months, backing down, makes another run, that 121 in King dollar is game again, which is just amazing. But, the way things are set up right now, that is a setup up there. What would change that setup is this. The change in the setup would have to do with King dollar coming off the highs with volume. That's how this is set up right now. Let's get a Mike in Toronto. Hey, Mike, what's going on?
Yeah, hi. Season's greetings from Toronto.
Hope you have a great one.
Yeah, I need it.
We got the Maple Leafs coming into Tampa the 29th. That's a beautiful thing.
Yeah, and how much are tickets there? $10 in the nosebleed seats?
You know, I don't know, but I don't think anything's $10 in Tampa.
Well, I'll check StubHub. I'd love to be down there. Anyhow, here's the situation. I am short crude oil.
Okay.
And I got this funny feeling that before New Year's we're going to test 49.
I think you're in good shape here, man. You know.
Yeah, but I think it's temporary, though. I think it's like a bear trap. They're going to sucker everybody in, and then they're going to rally it in the new year with this dollar topping out.
Well, it certainly wouldn't be a bear trap. Bears have made a fortune in the oil market right now. Mm-hmm. So a bear trap has to do specifically that you come off a high and people go short the market and then it goes higher. I mean, the amount of money in the short side of the oil market is huge. So oil's down 50%.
Yeah, do you think it's actually going to blow right through 50? Like that's something I should look for, eh? Look at the volume.
No, I don't think it's going to blow through 50. I think it's going to come down to 50. But what is game? This is what is really bizarre about oil right now. What is game is oil going into $39 right now. Because this ABC that's on right now, folks, okay, is a monster ABC. You know, if I could take the most conservative way, the A point is 73 and the B is 53. So it's $20. The C point is 58, so that's $38.
That's what I was thinking. But do you think it'll go straight down?
Yeah. If this thing, okay, we've been building cars we've been building cars 9 days right now for lower price. Mm-hmm. Everyone seems to think $50 is going to hold. So more than likely, what will happen is that at the $50 mark, folks, you're going to have a huge amount of stops at $49.70, $49.50, $49.20, and that very well could make the expansion go down. You know.
Oh, so they just blow right through all the stops, you're thinking?
Well, what happens is that when you have a downdraft that we may have, because we're dealing with round numbers, that yes, people will be in shock, meaning that are trying to nibble right now to go long, that they'll have their stops under 50. So if all the stops are piled up under 50, they're going to nail those stops. And that in itself would make the downdraft more dramatic. I can bring you over to the bond market. That's what happened in the bond market, folks. October 15th, there were all stops above that people were short, okay? So people were short the market. Once that 30-year bond, okay, got over the highs, the amount of stops at like 142 must have been insane because the bond market went from 142 to 146 in like a split second.
Okay. Second question is the following. I'm about to engineer a nursing home arbitrage. I cannot find a nursing home in the Greater Toronto area to take my father to. There's a 2-year waiting list. So I'm sending him to Eastern Europe, to Poland, where it's 1/3 the cost. Realistically here, the euro, can it get down to parity in 2015?
I don't see that, not in 2015. Just because I'm on the side that the dollar's going to pull back right now. So that means that the euro would go from like 121 up to 140 again, probably.
140, then oil would go back to 65.
Not necessarily. See, I know everyone's blaming the dollar, but that doesn't mean that, you know? Stay right there. We're coming right back. Dow up 52, NASDAQ up 41. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are up 48, Nasdaq up 40, S&Ps are up 8.5. We're talking with Mike from Toronto. We're talking oil. We're talking the euro. And so, hey, walk me through here. You're saying that in Toronto, the nursing homes are sold out, right?
Yeah, there's a 2-year waiting list to get into the nursing homes in the Greater Toronto area. I have my father is a Polish background. We're about to apply for confirmation of Polish citizenship. It takes about 3 months.
Okay.
And and like we have relatives there, and we're looking at the Polish zloty, and it's about 3.11 to the Canadian dollar. So to put him in like a deluxe retirement home anywhere in Poland, it's about $1,000 Canadian per month, and in Toronto it's about $3,500.
And that's cool. And he does have relatives. Someone can visit him, right? How far? I mean,
yeah.
how he?
I may go there, and just like supervise things and take out a temporary visa or something.
Good.
And like just trading is a full-time job, right? So it'd be a 6-hour time difference. So I guess I would be like it's 3 o'clock. 3 o'clock here, so 6-hour difference. You're basically listening to you around 9 o'clock, right? So,
yeah.
But the point is that everything's much cheaper there. Like, for example, in Poland, you can get high-speed internet, 120 megabits per second, for 23 Canadian dollars per month, and Verizon and Comcast are charging like anywhere from $125 to $150 per month.
Oh yeah, no, I listen to that. The same down here. No, I hear you, man. That's cool. That'd be nice, man. No doubt.
Yeah, I know. Like things that are like cell phone packages are like half the price that you pay in Florida. You see. Now the reason why I'm asking this is because it's the euro. It's the direction of the euro. Do you see parity at all? Do you see 83 cents even? Sometime? Like what would cause it? Would it be default? Would it be default in Greece?
No. What you do have is that okay, if we bring this euro back on a longer term basis, and this is where. If that dollar gets over 92, right, then the euro is going to be 86 in a heartbeat. What we've had here, folks, is this: if you're watching Tiger TV right now, since 2004, 118, 119 has been the lows. If you crack that low, it's going to, it'll get to 94 pretty quick,
Mm-hmm.
So, I'm just not in that camp right now. The reason I'm not in that camp is the way that the dollar, first off, what happened with the dollar, folks, is this. To get to the 2008, 9, and 10 highs, it took way too long. Mm-hmm. And it got over them, and now it's trying to get to the 2005 highs. That type of move takes so much energy that I just can't see that it's going to blow away everything. If it does, then, guess what?
What event could cause it? Could it be Putin invading Ukraine?
No.
Like some global crisis in Eastern Europe?
No. What it would be is this, and this is where I think the problem's going to come in, is that, and I'm going to give you the scenario that it won't happen first, and this is why. If you remember, folks, when I've been bullish on the dollar for a long time, and I've also been bullish on bonds, and what happened is that technically the setup was there, but fundamentally what ended up happening is that dollar bonds were being issued all over the world. And that started about 3.5 years ago. And it started in an extraordinary way, meaning that different countries and large corporations were issuing dollar bonds. And as soon as I saw that, I says, man, that's how I got so bullish in the dollar and on our own rates, because I knew when that was happening, you need dollars, number one, to issue the bond, then you need dollars to pay the interest, right? But simultaneously, I've seen this before, Procter & Gamble got caught in one of these squeezes beyond belief in the 80s. And what it is this. If you're delta neutral, and what delta neutral means is that if you're putting your debt in dollars and you take in dollars, you're okay. What all these countries and corporations were doing is that they were basically taking loans out in dollar denominations because people would give them the loans, but they were taking revenue in through the euros or through the yen or whatever other country they were. Now, that's a huge problem, because now what has happened is this, is that because the dollar's got so strong that Russia, there's plenty of companies in Russia that have already done it. There's huge amounts of companies in Europe that have dollar loans. And now they're like, they have to pay dollar loans back, not in euros, but in dollars. So when I'm looking at that, I'm saying to myself, you know what, man? This is going to come out of, like, third base somewhere. That is going to weaken the dollar, and it probably has to do with, it's going to be our own Fed, it's going to be a lot of different things working at the same time that, okay, hold it, man, we can't let this dollar get too strong because there's too many loans out inside the banking business, okay? Okay, so that scenario there that I just laid out would be the scenario that there wouldn't be a shock to the business and the Feds and the central banks would go first, right? Now, here's what the shock would be. The shock would be, folks, is that the scenario that I just laid out, all of a sudden you have some corporations or sovereign funds that say, hey, guess what? This oil has gone so dramatically low. I have bonds that are coming due, and they're dollar-denominated bonds, and guess what? I'm going to have a hard time paying for them. That scenario right there, bang, that scenario would send the dollar to the moon, would send the euro down, because all of a sudden people would be hunting all these loans and saying, guess what? There's going to be a lot of other countries, or sovereigns, or corporations, or all three, that are going to have a hard time paying dollar-denominated loans off. You know, that would. I suspect what we are going to have is that it's going to be a currency event that's going to have the S&P pull back anyway. You know, I just don't know where it's going to be. You know, what you do have out here today, folks, this morning, in fact, okay, is that Visa and MasterCard had to just stop doing business in Crimea. That's going to, now this just happened this morning, okay? They've been pushing. You know, what has happened with our large corporations is they still want to do business in Russia. Bottom line, guess what? This morning, that thing stopped. But if you can't take Visa and MasterCards and you're not going to be in, you know, a cash flow basis, there's going to be companies that are going to go south immediately. Because, you know, that's just...
A domino effect. Okay, I see what you mean.
Okay, man. Have a great one. Have a safe.
Thank you very much.
Okay. What you do have, folks, is this, is that you have to wrap your head, well, I think all of us really know, our business model across the world right now absolutely has everything to do with credit cards, debit cards, and credit. That's the bottom line. If the credit spigot, meaning just accepting credit cards, gets shut off, you're out of business. Flat out. That's it. You're out of business. No one takes, we don't even get checks in here anymore. You know, never mind, you know, everything is a credit card business. That is serious business when you can't take credit cards. And bottom line is that I suspect we're going to see more of that when this, you know, when the sanctions come down even more. Now, what we haven't had yet in the Russian-Ukraine whole deal is they haven't had extremely cold weather yet. You know, that in itself, I suspect the Russians in general are going to probably thread a little bit less with the bull because of the way this oil is. If we do shoot down to this $50 and $45, you're going to see some real problems created very, very quickly. But there's going to be real problems in a lot of different places, and including that. Now, this is where this shakes out too, including the amount of money that gets invested in our own wells in the United States. You know, so this is not a one-way deal. What I do see, though, is that this is absolutely some of the biggest tax break that we got without the politicians, thank God. Because this gasoline, folks, we're at $1.52 wholesale. This gasoline looks to me like it's going to go to $1.10. We go to $1.10, it's going to be just unbelievable, because what you're going to have is that you're going to be at the pump paying about $1.45. $1.45 at the pump is going to basically put a lot of money into a lot of folks' pockets very, very quickly. We take a look at some of the higher vol here. No, let's go to the XLE first. So the XLE oil and gas sector, what you have with the oil and gas sector, you've had a counter trend bounce. This sector in itself, though, folks, is already off 20% for the year. This sector wants to go a lot lower. You know, where the XLE is at 80, wants to go to 63. That's the XLE, rather. The XLF hasn't fell apart yet. The banking sector just hasn't fell apart yet. That's hanging at the highs up here. It doesn't have any juice at the highs, but I do expect we're going to see the XLF down to 22. Right now we're at 24. JP Morgan Chase, JPM, just, you know, hasn't given it up. JP. We take a look at JP Morgan. That's at its highs, but she has no juice up at these highs. This is a classic setup coming into the new year. There's no two ways about that. Dow Industrials right now up 47. You get NASDAQ up 40. S&Ps are up 10. And, of course, this is going to probably be one of the lightest days of the year volume-wise. Coming into this close right here, let's see. Yeah, you get 15 minutes left. You're only at 284 million. So she's going to come in at about 400 million at the most. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now are up 40, Nasdaq up 35, S&Ps are up 6.5. And don't forget, folks, at TFNN every trading day we have live content, 8 o'clock in the morning to 6 in the afternoon. You can get all of that right on your cell phone at tfnn.mobi. If you'd like to get Tiger TV, just go to tfnn.com. You hit the TV on the right-hand side to get the audio as well as the video. Now, let's go over and take a look at a few of these retailers first. I'm going to pull up, what's really intriguing here, I'm going to pull up Amazon first. So Amazon, folks, is up $6.69. You're at 309.72. Now, short term, this looks to me like you're doing a dead cat bounce. You know, it can go up a few more points. Longer term, what you have happening out here is you take this on a monthly basis, and Amazon had made its high at the beginning of 2014. That high was 408. Now we're down $100 for 309. Amazon is building cause to try to get into this next lower swing point, which is like another $100 down, which is 222. Now that being said, Amazon, okay, when you're talking about the amount of shopping that has got done, well, online shopping sales, okay? So Amazon and other retailers are on pace to sell more products online than ever this holiday season, aided by early promotions and investments in delivery systems that help avoid widespread shipping delays over the last year. Web sales rose 14% from November 27th to December 21st, said Channel Advisor, which is a consultant in the business. That's roughly in line with ComScore's November forecast that online purchases would gain 16% to $61 billion. What you have is this, folks, okay? And if you were doing any shopping over the weekend, you're going to see how this is going to play out, and it's really wild. So if you've never used Amazon Prime, folks, Amazon Prime, if you shop online, is the best deal there is, okay? It's all of, I think, $99. It used to be $79. I think it's $99 now. What you get is you get unlimited 2-day delivery. It works beyond belief. That's the first part. The second part is actually bigger, and this is what it is. The way that Amazon works is that price shopping is so easy, it's like sick, okay? So if you know what the product you want, and then you know what you're looking for, you can see the different competitive prices, and most of the time you can get the least expensive price, get it delivered to your door or someone else's door with zero cost. Okay, so that being said and done, what ends up happening is that I always like shopping also on Christmas Eve. We know the market always closes at 12 or 1 o'clock on Christmas Eve, so I always go shopping on Christmas Eve too. I just like doing it. And on Christmas Eve in itself, the malls are normally busy, but not as busy as people think they are, okay? And of course, at the malls on Christmas Eve, what are there? There's all guys, okay? That's there are some women there, but the reality is all guys, okay? Us guys that wait too long, whatever. I just happen to like it, but same deal. This Christmas Eve, let me tell you something, folks. When I went into the parking lot at International Mall in Tampa, it blew my mind. I could have parked anywhere I wanted to park. I go inside the mall, I'm talking to the people inside the mall. The bottom line, they all thought that it was only their store that wasn't busy. There wasn't a store that was busy, and I was there early. The brick and mortar stores, folks, are dead on arrival. Okay? The last thing I want to be is a brick and mortar store, and particularly in the retail business. I think we're going to see some heavy devastation out here this year. What's going to get intriguing is this, and this is what I'm going to be working on the next few days. It's going to be like these large mall owners. Is this something that's going to get hit in 2015? What has happened is this. They have had the wind at their back in an extraordinary way. Like if we look at Simon Property, that's one of the largest mall owners in the world. Simon Properties, straight line up. We went straight up from $22, you're at $184. Now the reason for that is twofold. The biggest reason for that is this, is that because interest rates got so low that all these large real estate, commercial real estate owners have been able to refinance all the debt they had. They refinanced high debt into low debt. So that got engineered, which it should have, in a positive way. Now what you have, though, is this. That re-engineering has already taken place. So now they get the new ones in the books. The real key is going to be what are the leasing structures going forward. And my take on this is that they're going to have to figure out something else. Because I think all of us, once you start using online more, and particularly I'm in love with Amazon Prime. It's so easy, it's sick. And it's effective. It's effective, it's easy, it's inexpensive, it saves you a huge amount of time, everyone's happy, and you can track everything. That, you know, now, and this is what is really, when I wrap this up and you see how this works, which is really sick. Amazon itself wants to go down on price, meaning the stock. And what you have is that these brick and mortar basically have a company like Amazon that is willing to lose money hand over fist to put everyone else out of business. And it's going to happen. That's what it comes down to. Then, little by little, Amazon will start raising their prices somewhat, you know, across the board. But we're all going to have a different dynamic as to how we're going to shop. You know, the shopping's going to be there, and we're probably going to end up buying more. But the real key is going to be what's going to happen with the brick and mortar. And my take, and that's where I think in 2015, these mall stores, the SPGs of the world, I think are going to have some big, big problems. You know, we'll see where this shakes out, but I do expect the retailers themselves, we're going to see a lot of BKs the first month of 2015. You're going to see the first week or 2 weeks, you're going to see, you know, places closing down very quickly. And what they've done is that they've made it through the holiday season. They won't pay their bills. They'll shut the doors, and the rest is history. So we'll see where this whole thing does shake out. What I do expect we're going to see coming Monday and Tuesday, though. So the volume today is viciously light in a huge way. Monday and Tuesday, you're going to have real trading out here. NYSE looks like it's going to come out about 350 million shares. That's at highs. This is going to be nasty. Going to be a little nasty awakening out here. The UK was up $11 today. No juice behind that. In fact, no, let me just see. They're probably not even open today. Yeah, they're not open today. They're not open today. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great weekend, safe weekend. Look forward to speaking to you right back here on Monday. Go get them, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
This is TFNN.